institutions deal. So institutions will sell into a high price. But if the delta is still quite bearish or neutral, they're not going to do any business just yet. They'll keep selling into the high price. So let's assume this red line is the delta. Since they're both red lines, you'll get a better idea. So this is the delta. And this is the price, right? So imagine this is how it's happening. Well, how much business am I getting done here? Nothing, right? Nothing. Because I'm trying to sell the market. I need buyers. I need lots of buyers in this market. So we maybe hold the price here, and I'm waiting for the buyers to show up, and the buyers still not really showing up. Say there's some selling delta still coming in. I'm saying, shit, what's happening here? So obviously what we generally as a rule do is we'll try and do the trap. What do you think happens to the delta when we do the trap, guys? Well, generally the delta then capitulates. If that delta capitulates, what do you think happens on this part of the candle up here? What do you think happens? You get something that maybe says something like 153 in black numbers. Yeah, would that be reasonable? You start seeing 153 in black numbers for a buy delta that's maybe getting trapped at a top edge. And when you see that 153 in buy numbers, what are you going to do? Well, that's demand. You don't know what's going to happen. That could be heavy demand. It's going to push the price higher. So what you do is you lean against it, not into it, against it. If I try and lean into it from here, that buy could be real. I could find myself on the wrong side of a doing at higher prices. So I'm going to lean against that guy, and if the price goes up, so what? I'm not involved in a trade. So I'm going to lean against this buy, and obviously the idea is that the price may well start to move, and obviously those buys can obviously get back into the short, and we get a big sell-off coming off of that area, and that's what you can, but maybe in this occasion, that's what you see here. That's why you've got to be really cautious about these types of leans. You've got to be really cautious about what it is you're looking for in terms of volumes and stories. You know, the stories have got to be clear. They've got to be crystal clear, guys. Otherwise, you could end up doing the wrong thing at the wrong price and end up in the wrong side of, as I said, a buyer at higher prices that's trying to get a measure. Well, you're right in at the wrong price, aren't you? So the only way you can trade these types of things is to lean against them, not trade into them. Not try and fade a big commercial or a big block. Mike will be the first to tell you that the guys that came off the floor that were done in were generally done in because they started to buy or sell into a big commercial and they didn't realize it. That's why they get done in. I'll buy 5. Somebody takes the other side, nothing's happening. I'll buy 20. Somebody takes the other side, nothing's happening, and the guy can't get away from his deal now. He's in 25, and he says, I'll buy 50. You know what? I'll buy 100. Shit, the price is still here. What the hell's happening? So, for example, this guy here, this 130. So the dealer, the floor guy, may have bought that 130 and says, okay, I like it. So he bought 5, he bought 20, he bought 50, he bought 80, he's got 130 long, and the price drops, and he goes, shh, what? I'll try and defend my position, and he buys another 150 contracts. And he can't get the price to move off the bottom edge. He's busted, guys. He's busted. He's going to hand in his jacket. He's never going to come back. So if you try and buy against that red, or buy against that red, or buy against that red, or buy against that red, you're going to be on your way to tombstone, guys. There's no returning. You went down a big dark alleyway and there's no way back, guys. At that stage, you're finished. So the only way you can trade against this heavy selling, and you might say, yeah, but most of them are really good reversal trades. Yeah, but it's not. Most of them could be really good at reversal trades. It's the one that isn't that's going to cost you your account. So when we see this one reversing, Well, it's the same as compound, isn't it, Stuart? If you average into a losing position, nine times out of 10, you'll come out with a big smile on your face because you've ended up getting away with it. Most of the time, it does work. It just needs one occasion when it doesn't, though, and your account's gone, guys. It's busted. The gambler's fallacy. So you don't ever sell into this unless you're a commercial. You simply wait as a local to see that this buyer is getting taken on by a commercial at the other side of the book. You wait, you watch, and you execute. Just the same as this one. You wait, you watch, and then you execute. That's all you do, guys. Keep yourself on the right side of the trade, right side of the market, guys. Don't try and fade against a commercial buyer. My God, it's a disaster waiting to happen. You see a commercial fading against a prop buyer, well, watch for them marking price down, because they'll mark price down, and you'll know they'll mark price down because the price will drop below the block trade. That's evidence that they're now marking the price down. Let's catch up with the